All right, what's going on, guys? It's Josh again. Happy Apple Day, August 2nd, the day Apple hit $1 trillion. People saw the run up coming into it the day before, opened up strong and just killed it out of the gate. And I blew a trade. And I want to show you guys, I'm going to show you guys my orders that I put in and why I didn't end up buying it. And, am I disappointed seeing after the fact where it went? I put in an order for, I saw it at like 10, 11 cents, or I saw it at 10 cents, then it hopped up to 11. And I was like, oh, I don't want it at 11. Then it went to like 12 or 13. Then I was like, okay, I'll put it an offer at 11. And I didn't get filled. And it just literally, it just ran from there. And, there was no catching it. And, I want to talk about that because it was a good trade. You guys could see what could have got from it. But I want to explain the reason why I didn't buy. You guys might be thinking, well, okay, what to 1,000%? Why didn't you buy it? It's about understanding what was going on at that fact. So we'll start here. I'll show you guys the orders as always. If you guys are new, make sure you subscribe to the channel, drop a like on this video if it helped you in any way, and don't forget to check out the free stock trading course. We were talking about it here in the chat actually all day. I think people have been going, they've been saying all sorts of stuff. Let's see, we got the chat in here. So we got about 132 people already. It hasn't even been a week yet. So get in here. We're talking. People are talking, chatting, a lot of stuff going on. So that being said, here's the order. You guys could see they're about 2 minutes apart. I start here, buy Apple August 3rd, 207 call, limit at 10 cents, and I was going to buy 10 of them. So I was going to put $100 in. These are the same 207 calls that are at $1.40 now. And then again, 2 minutes later, I put in an order at 11, and then after that, it was gone. And you'll see the time 10:06, 10:04 when we look at the option here. Let's see, 9:30. Oh, so that's 10:06 my time. So what would that be? No, was that? I think that was Eastern. Yeah, Eastern. So that'd be like, yeah. So should be up here. I don't know why I was saying. Yeah, it was after the first run up, and this is why I bought it. I'm trying to pinpoint the time. It's literally right around here. So as you see, I put it in at 10, it went to 11, but pretty much in that small, you guys see by 5, 6, it went from 10 cents to 20 cents. It literally just doubled on me, and it didn't come down any lower since then. I had some time, but after that, I was like, well, I'm not gonna, if I didn't want it, 10 minutes ago at 10 cents, why would I pay 20 cents for it? And it's a weekly, and there it runs that risk of coming down harder. So, with time. So again, more time went on. It was still holding that price. I think it clipped down here at 15, but I ended up letting it slide, and Apple just went through the roof. I had time to go back and do it, but I kind of wrote it off. I went and traded other stuff. I did make some good plays on Facebook and Netflix. The market just went up overall, so there's a lot of other cool plays, but in general, this was the home run. And now I missed it, and you guys could see here. I'm going to explain why I targeted it at this level, because it was a good point to buy, and there was something you need to learn with weekly options, and especially weeklies, is understanding their volatility and how the price is going to move. The stock opened, the stock started shooting up. If we even go and overlay Apple with it, the stock opened at 201, and really when it was at this peak right here, the stock was hitting a high. It was at 203, already went up $2. People were thinking, it's going to go straight up. I had the idea that I was like, wow, with this much volume, this much demand, they're either doing a share buyback, whatever it may be. It looked like it was going to hit 206, but I still wasn't too sure. But then it came down, and this is where I took advantage of the opportunity. I waited for just that first kind of dip. It looks too small, but really came down 50 cents, almost a dollar, was showing weakness. That's when I wanted to, but then it just quickly bounced up, and then it just continued that tear. So from there, I just wasn't interested in it. And again, it's because of understanding the percentage. Now with $100, I should have played more than that, and I wanted to, but even at $100, what you see is just the difference between 10 cents and 15 cents on an option. It may only sound like a $5 difference, but when I'm making these trades and I'm looking at it, I'm looking at it from the perspective of just straight percentages. So in this case, I'm not going to pay 50% more within seconds because, and another issue is when it's out of the money, Apple's a little bit better, but when it's a little further out of the money, remember the stock was at 203. So I was going what, $4 out of the money. If we go $4 out of the money here, you'll see it's a lower ask, but actually I think I'm surprised that it's actually a tight spread. In this case, it was like a 1 or 2 cent spread, which I wasn't having because even if I bought it at 15 at the ask, I was only going to instantly be able to sell out at 12 if anything happened. But looking back, I messed up on it. How I could have done it better and what I wanted to. It is risky, but I did it with other plays today and it worked. And that's why I'm just kind of beating myself up that I didn't do it on this, but it was averaging down. I could have opened up a position even if I thought it was too high at 15 cents. I could have went 5 contracts, got a little less, or even done the 10 and outlaid a little bit more and just kept buying down on the dip. But again, it was the first 30 minutes of market and the first hour or so. And that's something, no, 30 minutes, yeah, 10:06. And that's something you guys got to realize when you're trading options in the first, especially with Thursday, there's only 1 day left on the contract, 2 days left. But in the morning, it's going to have a lot more premium. And the first hour or two, pretty much after that, that's why you see here, why didn't the contract, even though the stock was at 203.74, it's higher than, right now the contract hit 20 cents when the stock was at 203, but it stayed at 20 cents all the way up until 203.99. And that's because a lot of time went on, and then the volatility, it had its down, up, came down, but really it didn't start taking off until once people start seeing, okay, it was really driving up. The IV held it up, but it's essentially after every hour that goes by, usually it's like 2 hour increments. If the stock hasn't moved or kept that momentum, it will plummet, or the IV, the premium price, will drop, and that's going to hurt you. So I was worried about that. Again, that's why I wanted to play. I liked it at 10 cents. It made sense. What happens. Obviously, now it made a lot of sense looking back. But again, you don't know that's going to happen every time. And that's the point. And if you guys have seen my plays lately, you see how I'm playing. It's about putting the odds in your favor. And again, I'm not trying to take too much risk. If it's a good lotto play, sure. If it's a good, even if it's a lotto, I don't like that term. Don't just buy stuff because it's cheap. You want to make sure the odds are your favor. And in that case, I said, I'm going to pay 50% more than what I was just about to pay for it. I said, I'll go 10% higher. I'll go 1 cent more. But then when you put it into perspective, it could drop heavily and you don't know what you're going to get filled at and if it's going to hold that premium throughout the day. Because if it stayed at 204, even if it went up to 204 and stayed there the rest of the day by now, and it just kind of only went up $2, it's up right now $6, 3%. But even if it only stayed up 1-2%, then that contract would have not made a lot of money. So that is the risk. That was the issue, and that's why I didn't do it. But again, like I said, how I could have done that better: averaged down, purchased in, scaled in, and kind of just not, or I could have been proactive at many moments. But again, for me, hopefully you guys even see, once I miss out on play, I'm not going to chase it. I went and I played other things. I saw Apple's doing its thing. I tried to find other stuff that might have a reaction off of it. Started seeing tech kind of pick up. I went there, and I still came out pretty solid. But at the end of the day, this one would have been a great play. Obviously profit wise, but don't chase them. And if you got, yeah, you could look at these all days. We could go watch all the plays that went this, but if the opportunity wasn't there, and I'm looking at the risk, I'm looking at the protection. If you guys go through the course, what I feel about that and how I said that. So I'll leave it at that. That was it. Hopefully you guys learned something from this, get an idea. Let me know if you guys played it. I think somebody paper traded, made 12 grand in the course. So that was awesome, man. Congrats. And let me know how you guys are doing with this and give me some questions. Love you guys. Stay in school, subscribe, drop a like.